Hi there, it's Paul from Hurricane Forex, and this is a video, this is the second go of making this video. So I'm going to show you how to set up Hurricane Forex first and then how to use it to actually trade the market. So first thing we're going to do is to open a new chart. Now obviously it doesn't matter what the chart is, so there's a bit of a sell break signal on that currency, which is very interesting, but I'm already short the dollar, sorry. So what you do first of all, of course, you've copied the indicator into your indicators folder. And then, so what you do is you could do file, open data folder, and then, in fact, if you're on MetaTrader 4, it'll automatically do it. You copy across, so you want to install this onto one chart, then right click the chart, do properties, and do, sorry, not properties, don't want to do properties, template, right click there, do template, save template. So make sure it's set on the hourly chart, make sure you've got these two buttons down, and then do save template and save it as default. Okay, if it's default's not there, just create it. Now if you come to my Discord, you can find that from the website, or just message me. If you come to my Discord, you can then join the Discord and you can get hold of this utility called Open All Charts, which you just install. You drag this onto the chart and hit OK, and then you just wait, and you'll see it rattling through. Okay, and eventually it will come up with a message. There it is, complete, thanks for using. Go back to the first chart, which is the one before any of the others. That's this one there, and just close it. So that's the chart you use to create it, so you don't end up with two charts. So having done that, you'll have all the charts open, and it's time to have a look through. So you'll be getting signals from Hurricane Forex, okay, and the key is to, I normally just wait for signals. I don't trade anything unless I wait for signals and I see signals, because it helps me to choose trades that are actually going the right way. So I'm going to start off with a trending market and talk you through how you recognize an uptrend. Well, the first thing to look up is here where it says market weak bullish. It tells me I've got a weak bullish market. So although it looks powerful, it's actually not as powerful as all that. And in fact, you can see the way it's just retraced here. I will say that at the moment it looks like we're having markets changing direction at the moment, especially with the dollar. But this is an example. You see firstly the gold line is solid gold behind it, the white line is above it, and then you've got this yellow line as well. And you'll see that we've got up here in the top right hand corner the spread. So you can watch out for any getting into, you don't want to enter a trade if that's 20 pips, for instance, like 10 o'clock at night UK time. So if you have a look at that, the spread will widen quite dramatically, and that's why people get stopped out in the middle of the night with the trade if their stops are too tight. If you keep a trade over, ATR is the amount of the average true range for the last 14 hours. So it gives us a rough idea of how many pips this trade is going to move in that time frame. So to evaluate this chart, for instance, if I saw a buy signal, I would look at it and go, okay, do I want to take this? My first target would be the 100%, and there isn't anything higher, which tells me that actually this is very high and it's probably worth actually waiting, because if it's near the 100%, the chances are it is going to retrace, and lo and behold, it does retrace. So although we're in an uptrend, we'll wait for another confirmation. I think we're going to get a head and shoulders reversal here. So this will be the shoulder, that will be the head, then there'll be another shoulder there, so it'll pull up like this, and then it will fall down, and that would go along with things. I don't trade Aussie New Zealand a lot because they are quite closely matched, as you can see by a flat. That's why this is a weak bullish market. So just control tab should take me to the next. If I turn this off, control tab. Okay, takes me to the next one. Here's a big bearish trend. There's a strong bearish trend here, and you can see actually a lot of things going on. Now, first thing I'm going to talk to you about the signals. These are signals. You see there's a red arrow with a dot above it, same blue arrow with a dot. These are changes in direction. Okay, so for here, let's look at this one. We've got a sell signal. We've got the first sell signal, second sell signal, and then the indicator is showing a possible, okay, move bullish, but it doesn't really happen. Okay, that's a fake, and you wouldn't take it anyway, because if you look at that, you can see that everything's saying this is a bearish trend. And then if we look here, here's the re-entry back into the bearish trend. So it didn't make it, hung around for a bit, probably waiting for news, and then it drops down and it pulls back, there's another sell entry target, so another sell entry. So your stop wants to go kind of above here, and I kind of try to aim for the second fib level for a take profit, and then when it hits the first fib level, in fact the second fib level is here, so there's the first fib level, there's my stop. But if I haven't got enough risk reward in that, then I'll tend to go entry, first fib level, second fib level. When it hits the first fib level, I will move my stop inside the entry of the trade, okay, and that being that protects my my investment. So here we've got one, for instance, here's a sell, and it actually does make it down to this level, which is where we had our first trade there. And there are different ways to trade this. Some people like trading stops, so you do a trading stop from the distance for your entry to the first fib level. Other people like me, I'm more of a set it and forget it kind of guy. I like to put my trade on and leave it alone. If it stops out, it stops out. And my risk reward is right, so I'll make a profit overall. So just tabbing through. So here's I'm going to look for a particular setup in the market, and is this going to do it? Okay, so what I'm going to look for is a change of, okay, this will probably do us. So basically what I show you is this kind of alligator thing going on. So this is, you'll notice that although we're in a buy trend, we got this sell signal. The first thing that happened was the price went right through this gap. You see how that happened? And then the next thing that happened is you'll see that these two start getting closer together. Okay, and then they eventually cross, and that tells me we are actually moving into what's probably a downtrend. All right, it's a bit of a rough downtrend. Sometimes you get this so that this will just go like that. So when it comes across like that, it'll start going like that. But because of the weird market conditions we've got at the moment, because of the Bank of England and all kinds of things going on in the world, it's just odd market conditions. So I would only be looking to take a sell on that, and you can see it says weak bearish up there. So I'm not interested in any of these buys at all until we get into a buy trend. I'm only going to take sells on this pair. Okay. In fact, here's a trade I've had on for a while, and this is Euro Swiss. This has actually been on since this candle here. Oh no, it's actually been on since this candle here yesterday. Yesterday evening I put that on. My stop was up here, nice and high, and it broke. It didn't break till this morning. In fact, lunchtime. It finally broke through this, out of this congestion. Realistically, I should have waited for a break out of the congestion, but I just put it on there because I'd already got a sell signal here. There's a sell signal here. That was a one candle trade basically, wasn't it? So you've got the entrance would have been here-ish, first take profit, okay, whereas, and you've got one here as well, so your entry would be there, first take profit, and you'd have actually taken profit on that one. We've got these two here which are kind of doing the same thing, but basically my entry was on this one here, just there. It pulled back, and I you know, like I said, I just leave them alone. All right, if it stops out, it stops out. It pulled back, it bounced down, and you see how it's bounced off of this fib level, around this fib level, but it can't get back through it. So I'm expecting it to carry on down bearish, okay, and I'm expecting at least to get to this 61.8%, okay, which I'm actually quite happy for it to get to. Let's just have a look at what that is. I don't know why I've left this down here. So if I move this up to here, that's going to be $700, which is about right, because I've already got that target in place. But in extension I could get to the 78.6%, but I'd like to hit this, and it's already been there, so that's kind of where I'm at. This is a bit of an odd downward move. It's not how I like it. You know, I like these big solid downward moves. Sorry about that. Same here, we've had a lot of very wild moves in the market, so it's very difficult to trade. This is the sort of downward move I tried. Here you can see the uptrend coming in and how it changes to a downtrend. Here's the so you've got your sell signal that breaks through both levels. These two lines are moving together towards each other, and then bam, we're in this downtrend. In fact, so when you hit that one, you've already had a sell trade out of it, so you've got a second sell trade here, and your target was actually only this one here, which it achieved quite easily, and in fact it did carry on. So you know, it's really up to you how you trade this, but obviously I'm only looking for sells because it's a weak bearish market. See how it goes down like that. Here's a strong bullish market, just the same sort of thing. Look how you see, actually it did go flat here, so actually that would have said flat on this bit here, so you wouldn't have taken any trades here, and then all of a sudden you got this big big bouncy coming up and down, and then you take this trade. I wouldn't take trades in the flat market like that. You're just going to sit there for hours. It'll be very painful. You might be right, but at least but it will be painful. Nice easy bearish trend going on here. Euro dollar, sell, little sell there. That's quite a fast moving sell because of news. Another sell here, but your stop. Let's just put that in place. Where would it be? So the entry on this one, the stop would be here. Yeah. Your take profit would be there. And it's a really slow, painful trade at the moment because of the way the markets are. It's just crazy at the moment. In fact, it did nearly here, so you'd be in profit by now, but you've got a buy trade there. So if I see a buy trade, I'm a bit more considering taking the sell trade off because of it's going the other way, even if it's in that downtrend. But we are in a very strange kind of market with some of these trades. Like sterling here has had a really bad day. It had a very bad day here. That's the UK government caused that. It just rallied up halfway, so sometimes we get this movement. If you haven't seen it before, it breaks off down here, pulls back halfway, and then continues where it was going. Okay, but we had lots and lots of congestion. That's where the market just sits flat. So we've now got a weak bearish market, and in fact it was a bearish market. And it's like people are saying to me, I want to buy sterling, and I'm like, I just think you shouldn't. I just think you should wait and see what happens, because there's so much indecisiveness in the market. It's very important to use knowledge you've gleaned from other things as well alongside this indicator. Fundamentals are vitally important. You have to understand what's going on in the market and not blindly trade. You won't be taking every single trade you see here. For instance, if you've got non-farm payrolls or the other one, non-farm payrolls or FOMC meetings, I close on my trades before them. It's just not worth gambling, and then wait for signals afterwards. So yeah, and that's the way I do it really. So basically you can sit here and wait, and what will happen is a signal will appear, and then you evaluate the signal by looking at the market. So and if you want to take the trade, you put your stop, as long as your risk reward's okay. So for instance on this one, we put a stop up here. Our take profit 1 is there, take profit 2 is there. So what you could do is, again, what I talked about before, so let's say you probably enter it about there is probably when you get the signal. And I think what we'd probably do, so if you were going to put a trailing stop in, it would be 40 pips. So you'd have a 40 pip trailing stop, so you put 400 in the trailing stop, so you right click the trade. I don't know what trades I've got on at the moment. I haven't got much on at the moment, so let's just say you right. I don't do this, I'll just let it run. Trailing stop custom, okay, and then you put in 400, and that's 40 pips trailing stop. Do not put 40 because that's 4 points, which is tiny, and of course it will just immediately stop you out in profit. So yeah, as you can see, I've got a couple of trades sitting on at the moment. I'm just waiting for more signals, but there's not a lot around today because the market's just crazy. It's just madness at the moment. And in fact, I have stopped a couple out today, and it's now Wednesday. The first 2 days of this week, no losses at all, and then today I stopped a couple out. Not that bothered, as you can see. I'm still in profit and still growing my account. This is likely to become New Zealand yen. Look at this rally. There's a rally on it, but it's just looks like it's going to turn around, so I'll wait for a sell signal on that. And then just the same thing with New Zealand dollar. Here's a big long run up. Oh look, we've had a big move down, which means we are either going to get a breakdown. You see, if this pair does this, okay, you'll find these lines will come up like this and come together in some way as that happens, and then it will go down and off we go into a bearish trend. It's pretty accurate, it's pretty easy to see even for a beginner. So like, guess what we're not going to do? We're not going to trade any of this. You can see what happened. I can tell you exactly what happened here. So here's the open of the week. I think that's probably the Monday there. So here's the news. The news rallied like mad. Now if you see a rally like this, and you could enter it here because you've seen a clear breakout. The trouble is they do fake breakouts all the time. So this is a market, so to be safe you're better not doing it. You'll see it also, something else I forgot to point out here on this chart is very interesting. I've got actually a sell on this because I saw it breaking down through here. So you can see the very interesting move that's going on here is it goes along and then it powers through up here, but it's really flat. You see all the lines are right bunched up together. You can't see what's going anywhere. The indicator is going, we're going to buy. Most of those signals are buy signals, so you are now thinking, I'm probably going to be buying this. And then here's the breakout. So you take the breakout buy. There's your first target met. Here's the breakout buy. Second target met. Breakout buy. Third target nearly gets to it and then pulls back. Hopefully you've put your major stop safe. Fourth target here, and you can see it actually hits the same level and then it pulls down. I will say this, it's much easier to get entries into the market than it is to work out where to close it all the time. I'll tell you that for nothing. So I tend to try and evaluate the trades at the end of the day, and I may close about 5 o'clock UK time, or I may just leave them open if I think they've got more space to go, and especially if they're safe, like the stop is inside. So if I've moved this stop inside this entry for the short, I'll just stay in it, just leave it and see what happens. Now these staircase of things, these are daily Heikin-Ashi moving averages, which is kind of a mixture of Heikin-Ashi and moving averages, which I've invented. That's the same thing with that one and that one. That's what they are. They're a mixture. That's why you see them being more jagged than a normal standard moving average, and sometimes they get smoother, and the more jagged they are, the more volatile the market is. So if you've got really smooth, so if you've got really jagged movements like this, you see it says it's strong bearish, so the movements are much more pronounced than if you've got a more smooth, like see here, it's really smooth. So that's because it just went down and it was really quick. So here again, you've got a flat market there, congestion there, you can see because the white line just goes flat, and it's just telling you now it's a weak bullish market. So you have got more, if you're in a weak bullish market, it's more likely to we're more likely to have a retrace, okay, and we're more likely to have a rally against you, okay. If you're in a strong bearish market like this one, this is a strong bearish market, so I fully expect this to turn around, and there's a buy signal here because it so powerfully moved up, but I'm expecting to take a sell on this very soon. Okay, I'll just wait for the sell signal. I don't trade without signals. I found that if I trade without signals, I get in early. So I hope that's helpful. If you want all the details, hurricaneforex.com is the website. You can read about it there. You can get it installed on your MetaTrader 4. Again, please join the Discord, because we're able to, and you can find that at hurricaneforex.com. And we can discuss it with you and help you set the system up, make sure you're doing things right. But you know, there's no right or wrong. I trade this on the hourly chart. I like it. I can see straight away. Look at this. You can see a clear. It was in a bullish trend. It's now moved into a bearish trend. Look at the way it crosses. The way this gold line starts going blue and then eventually goes completely blue, apart from the odd rally. You know, it's not rocket science to trade with this, but it helps if you have knowledge about trading. In fact, here is a gold trade. I won't take that because I don't actually trade gold. I have it there to look at, but give you an example. So here's a gold trade. You can see exactly what's happened. So it's been bearish for ages. We had this big flat market here, okay, and then it's actually a bearish flat market, and here's the bearish move I was waiting for, that broke out of this congestion. It broke here, and now it's done a big rally today. Okay, now I need to see that. So what I'm expecting, what will happen now, is if this is a bullish move, that will go like this and it will cross, and then I'll be looking for another buy. All right, I'm really not keen on this buy because it does seem the market's kind of got to here, and at this point it may do what it did here and reverse. You see that? The way it reversed against that line. These lines are important, okay, because they can stop. It's almost like the market sees them and sometimes goes, oh my gosh, I can't stay there, in an American accent, obviously. Okay. So yeah, so I hope you start to see what you're looking at and understand what this will tell you. I know a lot of traders like trading with completely blank charts and just drawing boxes, but the thing about this is it gives you that extra, you know, input, and it alerts you when it thinks you should be trading. And the amount of great trades I've had out of this have been incredible. Really, really happy with it. Again, here, you know, if you had a bear chart, you'd look at that and think, well, what's it going? Well, it's in a big bearish move, but it's actually a weak bearish move. So that means it's more likely to actually reverse. Okay, I'm Paul, hurricaneforex.com. Join the Discord. Get it on a MetaTrader 4. It's $30 a month. Okay, there is a demo, but you can only run it on the back testing tool, so it's not that great. If you're brand new to trading, I recommend trying pay your $30, stuff it on a demo account for a couple of weeks to get used to how everything works, more about how you place trades and run it, get yourself making a profit, and then move to a live account. Thanks very much. Cheers.